Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. All right, welcome back to the program. My guest is joining me right now virtually. He's Omoyeni Ibukunoluwa. He's a sub-Saharan Africa economist at Vertiva Capital Management. Hello, Ibukun, how are you? Good morning.
I'm good. Thanks for having me.
Yes, fantastic. Morning. Now, let's get started. This inflation music is beating louder now. How much louder is this inflation, you know? What's your learning of the September inflation numbers that came out yesterday, the readings yesterday? Can you walk us through it quickly?
Okay, so according to the numbers that was released yesterday, headline inflation rose for the first time since June. It rose to 32.7% on a year-on-year basis, driven by increases in both the food and core inflation. So food inflation rise to 37.7%, while core inflation rose to 26.5%. But on a month-to-month basis, we saw that food inflation also rose, driven majorly by the elevated transport costs. We are aware that due to the harvest season, we saw food prices cool in August, but in September we saw higher PMS prices, given the fact that the NMPC adjusted the PMS rate to align with the exchange rate realities. We had noted that since January or February, when we saw major adjustment in the exchange rate, that adjustment has not been reflected in the PMS price. It's just now that we are seeing that adjustment filter to the PMS price, and at around 1,001, 1,002, believe that the exchange rate will be current week exchange will be fully priced into the PMS, into the PMS price, and that would, of course, keep inflation elevated for the near term. So basically, it's just showing you the impact of the higher PMS adjustment on food prices.
Elevated inflation for the near term, according to your analysis. What is near term now? How long is near term if we're going to see soaring inflation rates like this?
So I think for the next 3 months, inflation is going to rise. We think that it might rise to up to 34-35% by December or January 2025.
Up to what? I didn't get that.
Up to December 2024 or January 2025, we're still going to see higher inflation numbers. And the only factors that would prevent this is, one, we see a significant appreciation in naira. Two, a significant drop in oil prices. One of these factors could cause inflation to come in much lower, but we think that given the adjustment we are seeing, we think that PMS prices should settle around 1.2, where we see some responsiveness of PMS prices, and that means that there is an upside risk to inflation for the next 3 months.
So that upside in inflation should come at what rate, with your analysis? By December,
so
what are you looking at?
34, 35.
Oh,
I think 34-35%.
34, 35.
35%, yes. So
Okay.
we think that by October, we are looking at 33.9 for next month's inflation print. We think it will fall within that region between 33.8 to 34.0%. And we think that subsequently is going to chop further with 34% lean towards 35%. And like I said, there are factors that can actually prevent this from happening. We see significant currency appreciation, or we see a significant drop in oil prices.
For us to see significant currency appreciation, what will drive that? Because it seems now that that is still going to be far-fetched. Since the exchange rate seems to be the elephant in the room in the prices that we are seeing, both interest rates as well as price levels, what will drive an appreciation of the naira?
So what can drive it in the near term is, number one, an increase in foreign portfolio inflows. Nigeria recorded around 3 billion in Q1 because of the significant devaluation of the naira, as well as the concerted increase in interest rates. The carry trade became attractive, and a lot of foreign investors decided to buy naira assets. Right, a lot of those investors took profit in Q2, and as we saw that foreign portfolio inflows dropped to around 2 billion in Q2, but in Q3 We think it's going to fall to around 740 million dollars, given the data that we have, provisional data that we have. We think it's going to fall to $140 million. What that tells you is that the foreign portfolio inflows that we recorded in Q3 is about is a very significant decline from what we saw in Q1, right? And now that the naira is approaching 1718, this is the same level that was attractive as at that Q1. If the naira depreciates to 1,007, 1,008, and interest rates remain this attractive, we may see a repeat of that process. And if we see a similar $3 billion inflow, it's very possible that naira might appreciate again towards the 1.314 corridor, 1.211 corridor, and that's one factor that can actually play out to cause a naira appreciation. However, it's more of a short-term measure if the naira weakens beyond the current levels, because we know that the weaker the naira, the cheaper it becomes in terms of really effective exchange rates and purchasing power parity.
Yes, it's very interesting, and that's what the central bank has been chasing through its monetary policy committee in terms of trying to catch up for a positive real interest rate return. But if you're seeing that interest rate is also depressing businesses, local businesses, because local interest rates would also rise, interest loans rates will rise, and all of that. Is there a middle ground to be able to get this right, to balance it?
Well, the middle ground, we need to understand that what we are currently going through is as a result of past policy decisions that were obviously policy mistakes. And one of the mistakes we've made is not deregulating the production sector for a long time. The second mistake we've made is allowing for evaluation of our exchange rates before we ensure there's significant adjustments, right? A study that was recently released by an economist mentioned that any depreciation beyond 5% for any quarter is inimical to growth for the Nigerian economy. And what it means is that a steady 5% depreciation quarter on quarter for a long period of time is better than a one-off 40% or 50% devaluation of the currency. So those two policy mistakes have caused us to be where we are. We've also expanded our money supply at an alarming rate. Nigeria used to have monetary targets such that money supply does not grow outside a target range. But since about 2015 to around 2021 or so, we saw a significant overshoot of that monetary target. And what that means is that once money supply increases without a corresponding increase in output, for instance, we know that 23 trillion was put in terms of ways and means, but between that same period, we saw 9 trillion improvement in our real output, which means that output improved by 9 trillion, money supply increased by 26 trillion. Of course, the rest is going to go into prices through the exchange rate channel. So that's why you are seeing exchange rate depreciation. And in order to tackle this, of course, you need to take some hard measures when it comes to ensuring that your interest rates are very high. You have to curb money supply growth, and that is why you're seeing the CBN tightening through every means it could, through the MPR, through the CRR. We're seeing very high CRR. These are all measures to bring money supply growth under control.
Let's dig in a bit further into the inflation numbers for September. Apart from petrol prices, and to what extent did petrol prices influence the September print? Then let's take a look at other factors that drove inflation. Of course, the first hike, the first upside that we're seeing in 3 months, as it were, because we saw this inflation in the last 2 months that was perhaps attributed to harvest season. So let's dig in a bit into the inflation numbers for September. The food, the core, urban as well as rural.
So for food inflation, we saw food inflation rise, and definitely the reason for this rise will have been higher PMS prices. You agree with me that transporting most of those food items would involve PMS one way or the other. And as a result of the significant scarcity and increase in PMS prices, we are seeing that translate into transport costs, and that kept food inflation elevated. However, we noticed that there was a surprise reduction in core inflation, and that on a month-to-month basis, right? Although on a year-on-year basis, we saw core inflation rise year-on-year, but we saw a mild reduction in, and one could actually point to the fact that Most of these payment increases were already persistent in some areas. If you recall that there was scarcity, right? And even during those periods of scarcity, payment prices adjusted to around the 1,000 levels in some areas. So now with this recent official adjustment, it doesn't really come much as a surprise. And that's why you are seeing core inflation decelerate slightly on a month-to-month basis. But on a year-on-year basis, it still shows that there are pressure points that need to be looked into. But again, these are pressure points that we cannot really avoid because we decided to take the path of reforms. Those reforms is to see that energy prices reflect the underlying in terms of oil prices and the exchange rates.
How long do you think that these pressure points will continue? I don't know if you heard from the World Bank Senior Vice President and Chief Economist when he mentioned that the NESG, of course, that has been a bit controversial when he said that Nigeria needs to stay the course for about 10 to 15 years in terms of reforms for us to see the fruits. What do you think? And a lot of us that were in the room were like, you know, people just were not comfortable with Mr. Gill. What do you think? Or whether he was misunderstood? I will have the opportunity to ask him that question tomorrow because the World Bank will be launching the Nigeria Development Update tomorrow and I'll be anchoring that session. So I'll have the opportunity to ask him that. But what do you think about that?
I think he's absolutely correct because if you understand what he was saying, he says that we have to stay the course for the next 10 to 15 years.
Stay the course of
and
what?
That,
because what Nigeria, yes, what Nigerians...
Let me explain what I'm
are you telling me inflation for 10 years, you know? Yeah, go ahead.
He is not saying that inflation will rise for 10 years. He is saying that the policy choices that we have taken, for instance, no subsidies on both the FX and PMS side, that would free up resources for saving and investment, right? Fundamental models of economics will tell you that you need 10 to 15 years of massive investment or savings in order to really develop your economy. And if we return to the path of subsidies, whether it's FX subsidy or PMS subsidy, we will not be able to achieve that, right? Looking at what has happened over the past, let's say 9 to 10 years, since 2014, since the oil price crash, Nigeria did not fully take advantage of its savings from the oil boom of the 2010 era in order to develop its economy in the 2010s and 2020 era. What we saw instead was sustained subsidy, and because of that, we saw our GDP per capita fall to levels that were below the 1980 levels. So what is trying to tell you is that if you stay the course in ensuring that the reforms, in ensuring that subsidies are no more, ensuring that prices are just when they need to, and usually when you initiate a subsidy removal reform, what will happen in the first 2 years is that you will see elevated inflation. But after that, because the prices have adjusted to the economic fundamentals, you will not see those sudden shocks anymore unless you choose to go back to that subsidy regime, right? So if you are seeing oil prices, for instance, fall next year, you will see that PMS prices will actually fall because if it is linked to oil price, it should actually fall, right? But in a situation whereby we go back to subsidizing, we will now waste the money we'll have spent on developing the economy, developing certain critical infrastructure, and again, we are back to square one. So I think it's actually very correct. It doesn't mean that inflation will be high for so long. At the initial stage, there'll be high inflation, but over time, that inflation will reduce because the economy has fully adjusted to the factors that influence prices.
Yes, I understand. I understand, you know, significantly what you're saying. And I also understood what he said in the room on Monday. But you know that Nigerians right now are very angry and they don't want to listen to perhaps even any voice of reason. The voice of reason right now is that prices are generally high across board. One would say, technically speaking, that sounds economically good. But the issue is that, okay, the savings that will come as a result of full deregulation of the petroleum sector and all of that, how will it be used? Because it's one thing to save, it is one thing to spend wisely and spend on public infrastructure, on things that will move human capital development. But yet we are not seeing it, and that is a very dangerous trend because was it last month? Okay, we're in October now. Last month, the 3 tiers of government shared 1 trillion naira. So one would say, where are the monies going to? So if the government is telling us, okay, wait a while, be patient. This is just temporary pain. This inflation will pass. This will pass too, just as the Holy Book says, this too shall pass. How long can Nigerians wait for to groan under severe inflation when we're seeing that perhaps the money is not well spent? I hope you
Okay,
understand
so
the logic of my question.
I have the logic of your question.
Yes.
So I know that you can tackle this from two angles, right? The first angle you have to look at is the angle of the subsidy. When subsidy was being paid, we know that this led to ballooning debt for the NNPC, and it got to a stage where the NNPC felt it could not bear this on its books anymore. So for every time we were seeing cheaper payments price, the NNPC was taking a hit on its books, right? So it got to a point where um, you just have to see payments price rise and things adjust properly, right? So in terms of the social concerns, of course, there are key social sides to reforms, and that's why it's important that policies to ameliorate the impact of these reforms on especially the most vulnerable in the society is important, right? And I think it was that's what in development economics we call it social safety net.
Safety nets, yeah.
Right? We didn't really see so much social safety nets following the removal of subsidies, especially to protect the most vulnerable or the most exposed, right? You know very well that that was the only thing we didn't do right, and that's what you look into, right? Especially in a situation whereby you have a lot of Nigerians living below the poverty line, and that's why I would agree with you that. But in terms of the reform in itself, it has to be that's to take place, right? Let me now comment on the issue of the FAC allocation. Right, the CBN governor made a very brazen, what I would say, a brazen comment during the last MPC meeting that he observed a huge correlation between FAC allocation or FAC releases and
Depreciation of the
exchange rate
naira. Yeah.
depreciation, right? And that's a very it's very good that the CBN has seen that. These are things that in-house we've seen for a while now. We've seen the correlation between both the ways and means and fact releases on the exchange rate. But we think that beyond that, these are two things that need to be tackled because we have to ensure that value that's being created does not get wasted, right? We have to ensure that there is fiscal discipline and there has to be new measures to ensure that that doesn't happen, right? We have to there has to be trust and confidence in the currency so that we ensure that we don't shortchange ourselves because it's one whereby government we should be of course supporting um, its nation is ending up taking that money to the foreign exchange market. That's actually that's anti-patriotic in everything in that
Yeah.
sense. So it's very good that the CBN mentioned that fact because these are the little factors that could actually dissuade development. But we know that due to the measures that have been taking place, especially with depreciation, more resources are now available at the state, local government level, federal level to intervene or to intervene in their respective economies. And we have to ensure that most states keep to that, right? And that's why I really like talks around the new fiscal bills. I'm hearing about some new bills where the federal government would necessarily earn about 10% of FAC. There will be an equal, like for every 100 naira, the federal government gets 10 naira, right? Every state gets 1 naira, the 6 states, and the remaining is shared based on derivation. That would actually encourage a lot of states to look inwards and um, and develop their economy, develop their revenue sources so that they can probably earn more at the FAC table. So I think that's a very good reform that would help dissuade this feature. We also think that states should actually be rewarded with more cash based on meeting certain development goals. For instance, literacy rates. For instance, the investment inflows. Right, there are some states that recorded very abysmal capital importation numbers, and that's very very wrong. We have the 6 states with vibrant natural resources. Which those state governments should begin to look into ways to incentivize investors to come and invest in their states. And if there is a reward system for the federal government to encourage that, that would really be welcome because we need to really move from, well, we need to really see the need to build a strong naira. And that can only happen when there are investments that are large enough to create the jobs that would drive output higher in their economies.
So many questions from what you said there. Let me take two quickly. Naira as one of the worst currencies in sub-Saharan Africa. You cover sub-Saharan Africa in your organization. Are you a bit discouraged with that from the World Bank? I know you would have been seeing these numbers and you would have known. Which currencies also in Africa are we trailing behind, or are we in the same club with? Then the other question would be, how do we really win this inflation fight? Because if you're saying, you said earlier that you see inflation at about 34–35% by the end of this year. How do we really win this inflation fight? That's the second question. Then the third question, sorry, and perhaps we'll end. We have about 5 minutes to the end of the show. Is in this inflation reading, I noticed, and I don't know if you also did, of course you will do also. If we take a look at the year-on-year inflation, the highest rise were recorded in Bauchi, Sokoto, and Jigawa. Food inflation to the highest rises that we've seen are in the northern states. That's Gombe, Yobe, Sokoto. Where I'm going to actually is around, these are food belts of the country. If where food is being produced are suffering, the states are suffering highest rise of inflation, that is a dangerous trend. And what does this say for us solving that issue? That even states in the south-south and in the southwest have slowest rise in food inflation. Where you're supposed to produce, you're not producing. What does that mean?
So I think I'll start with that, your last question.
Yeah.
Unfortunately, that is where food is being produced, and that's where food should be the cheapest. But again, on the other side of the coin, because northern states are farther from the ports, so that's why you're going to have the most expensive fuel. So I think what happened there was that increase in PMS price was more impactful on those states, and that's what drove food prices up, despite the fact that we are in harvest season. So I think that's what drove it. And you've noticed most of the states where you have the slowest rise, probably because of either they are close to the ports, or two, you look at a state like Benue, that's where you have a lot of food, really. Benue is called the food basket of the nation. So it's possible that the harvest is still driving food prices down in Benue. But across other states, I'm sure it's because of the high fuel prices. Now, for other African economies, what we've seen is that, for instance, Kenya was able to refinance a key Eurobond that was maturing this year. And because of that, we've seen its currency strengthen significantly by over 20% since the beginning of the year. Right? South Africa, for instance, although the rand was depreciating going towards its election, but despite the fact that the ANC lost its majority in the parliament, and we had a coalition government, we've seen the rand strengthen since then. Right? Why has the same happened for the Naira? Because Nigeria was the only country that broke the money printing rule across these economies, and as a result, we are seeing this negative pass-through in terms of exchange rate pressures and elevated inflation. So if you begin to implement that monetary discipline, we are going to see things go better again. And just like the World Bank chief said, CBN, there's no longer monetary deficit financing, but I think what also needs to be looked at more closely is FAC allocations and its relation to effect. I think that factor really needs to be looked at by the CBN to ensure that the negative impact that ways and means had on the foreign exchange market does not turn over to FAC and the foreign exchange market. So I think that is where things need to be looked at. Everyone needs to be confident in Naira again. Now that we have rates this high and attractive, so it's important that the CBN carries out its own investigations and implements its policies. Thank you.
How do we win the inflation fight? That's the last question. And do you see Cardoso's MPC meeting November 26th, the forthcoming one? Do you see them being a bit more hawkish or aggressively hawkish now? Because they've been very hawkish this year. 8.5% increase. Do you see the interest rates rising further on November 26th?
I think given this inflation outcome and the forecast, we think that debits might continue to raise interest rates, 25, 50 bips. Might just have to continue because of the surge in inflation, the FX issues that we have, so that they send a good signal to foreign investors to bring in their funds and invest in Naira assets.
Okay. Thank you very much, Omoyeni Ibukunoluwa. Thank you for your thank you for your insights this morning. Do have a great day.
Thank you for having me.
All right. I've been speaking with Omoyeni Ibukunoluwa. He's the sub-Saharan African economist at Vertiva Capital Management. And that's the much we can take on today's edition of the program. Thank you all for watching. Thank you for your company. As always, I am Nancy Naji. Be the best you can be and be that change that you want to see. Bye now. Thank you for watching. In case this is your first time watching us, thank you. Don't subscribe to the channel, drop your comments as well as like, and most of all, share our content.